All right, welcome to today's session. Today we will be looking at the indices, NAS100, DJ, Dow Jones 30, SP 500. Right, today is the 6th of August, midweek, and my name is Sherman. And we are going to begin. But before we begin, let's just look at some of the disclaimer. Trading any forms of derivatives carries significant risk. Do ensure you fully understand the risk before you make any trading decisions. Always start off with your own demo accounts first before moving on to your live accounts. Right, is the audio too loud? Okay, hopefully this is better. All right, and as well, there is a deposit bonus going on still, 10%, 50% deposit bonus for your first $1,000, and then a subsequent 10% for any subsequent deposits. Cool. Okay, so as always, we will be looking at some of the fundamentals of the topics that we're looking at. We'll be using two different tools, two AI tools today. Okay, so one of it is Gemini, the one that we have been using all along. So if you head over to gemini.google.com, you can actually search and do a little bit of research, or get the Google to actually do the research for you. So basically put in the topic for today, indices, and basically draws an outline of what it is going to analyze, and before it gets the confirmation from you before getting out the report. Okay, so you can actually change or tweak anything in this draft before it generates the report. Okay, and then I'll give you an explanation, and then you can take a look at the infographic that it's being generated. We'll look at another tool today. Hopefully there's sufficient time for us to do the technical analysis as well. So I'm going to go a little bit quick. If you have any questions, feel free to put it in the chat or comment section. I have that on another screen, so I'll be able to answer that. All right. Okay, when we look at US indices, we're looking at very macro kind of overview, and we know that all three indices have reached their all-time high. Okay, so key things that we want to look out for in terms of the US stock market. Okay, looking at a bit more on the fundamentals first. What is that GDP growth slowing down due to the tariffs, and usually there is a lag 3 to 4 months before that the impact of the tariffs kicked in. So we're probably looking at Q3 2025 to see the slowdown in that economy. Okay, headline inflation kind of increased slightly, but more or less it's hovering around 2.7%, and your core inflation, which is less your home and your energy prices, they're at 2.9%. Okay, the key level that we are watching out for is actually 2%. Okay, that's the Federal Reserve's guideline, or 2% target, or the target which they will kind of say that inflation is under control, and they will be looking at lowering the federal interest rates. Okay, a surprise that came out earlier this month, which was last Friday. Okay, 73,000 non-farm payrolls. I think the expected was 95,000. Okay, so there is a slowing of creation of jobs in the market, so that ties in with that slowing down in the economy. Unemployment rate is still at 4.2%, but 4% is the natural or the structural unemployment rate, which means that this is kind of like a safe number to be at, still pretty healthy in terms of unemployment rate. Okay, structural unemployment is when the unemployment is due to people in the economy switching jobs or trying to find another job, and that's kind of like a natural state of, or natural percentage of people being unemployed while they're actually looking for jobs. Okay, So a little deep dive into the performance of all three. You can see NASDAQ 100 leading the charge over the other two, and that is because of all your tech and AI related stocks that are pushing it up. Okay, so tech concentration, you can see a very more than 50% concentrated around 5 companies. Nvidia, okay, your chips company, Microsoft, Apple, Amazon, Meta, which is kind of like the big tech guys in the NASDAQ 100. Okay, surprisingly, one of the biggest giants are not in here. So like Google and Alphabet is not part of this 50%. Okay, Dow Jones, your blue chip diversification. Okay, Goldman Sachs, hedge fund, financial institutions, Microsoft, part of Dow Jones 30 as well. And then you have some brick and mortar stores that are taking a big portion of the Dow Jones 30. Okay, S&P 500 would be an indication of the broader market health. And you can see that a lot of these companies, 82% of the S&P 500 beat their Q2 earnings. Okay, so overall, you can see Q2, it's the big dip in Q2, right, was due to the tariffs, but nonetheless, the companies are still thriving. Okay, so same thing, we have been talking about this Fed dilemma where you have a very healthy economy, but you're not willing to reduce the interest rates. Okay, so that leads us to this number here. Again, you can go to Fed Watch under CME, right, to find out what is that the probability. And again, this probability is based on consensus. I think there are like 15 to 20 banks or financial institutions. They submit the analyst reports, and basically that is the average. We're taking the average of all of this financial institutions' expectations to derive the probability of a rate cut in September. Okay, so key thing to note, if you have a cut in September, then there might be a loss in value of the dollar, and then you will see a sell-off in the dollar. Okay, so again, 3 to 4 months of lag, you get these tariffs, imposed of tariffs back in April, and then some delays. August 1st, there were some that were implemented. You get to see this roughly around 3 to 4 months later, 1 quarter later. Okay, so higher consumer prices, you have lesser profits, and then you get slower growth. Okay, couple that with AI replacing a lot of this lower level junior jobs, then you will see a higher number of unemployment and lower job creations in the next few NFPs. Okay, overall, there's an OPEC increase in supply of oil again, so energy sector is probably going to see a drop, but independent power and renewables still likely to see greater growth in terms of energy and healthcare. Okay, so good thing that Gemini actually gives you strategic recommendations as well. So continue to diversify beyond US large caps. Okay, a big portion of your S&P 500, NASDAQ, and Dow Jones are concentrated around a few big names. Okay, try to mitigate that by diversifying your portfolio, and also target a few specific sector, particularly AI, maybe a little bit overboard, but still the industry to look at when we look at the next couple of years. Okay, so as always, maintain risk management and agility. So overall, I think this report is pretty good, pretty comprehensive to compare across all threes. We talk a lot about macro stuff, a lot about fundamental stuff. So give Gemini a try. We are not affiliated, but I think it's a good tool for everyone to use. Okay, the other tool that we are going to use is the Perplexity. Okay, perplexity.ai. So this is considered the Google killer. Okay, so you guys can give it a try. Same thing it does is research go through all of these websites, and it has an internal kernel where you can actually run certain calculations while presenting you with this report. So very good tool for you to keep it in your AI arsenal when you are looking to do some research on the topics. Okay, so Perplexity, I think they do have an internal web scraper and web crawler for to crawl all of these results in real time. Right, so this is all this data that it shows you. It's the latest and the greatest. Okay. So research-wise, you probably can get the same content here, okay, and then it gives you the conclusion NAS100 shows stronger upside potential. So if you're looking to buy, NAS100 will be the one that you want to choose. Okay, same thing, AI revolution, your Federal Reserve policy. So a lot of these AIs, they do come up with very similar conclusions. Okay, so you kind of spoil for choices in terms of which AI to use. Okay, it does its own technical analysis as well, which we are going to do in the next 15 minutes. Okay, and of course, risk factors that you need to consider. Cool. So give it a try, Perplexity plus Gemini, for you to do your research. Of course, you can expand on that query. Of course, this is just looking at these 3 indices. And at the end of it, you can basically ask a follow-up question on this as well. Okay, cool. So let's head over to our indices and we'll take a look at the NAS100. Okay, since there was the recommendation by Perplexity. Okay. So basically, you want to use the one that is by Vantage. Then you get the same data feed as your broker. Okay, so let's do the high time frame analysis, and then we zoom down to the low time frame ones. Okay, so as always, we use the Wayne's pivot. It gives us the pivot for us to measure certain key points from for the month. Okay, so we have 9 key lines, 2 support lines, S1, S2, 2 resistance lines, R1, R2, and then M lines are basically your middle lines. Okay, overall, you want to look at the trend, define what the trend is, and right now, since that tariff, you can see from here, okay, it is in an upward trend. Okay, how do we actually use the pivot points to determine the trend? If prices break above R2 for a particular month, we are actually bullish. If it breaks below S2 and close below S2, then we are bearish. Okay, so you can't actually see this on the monthly, but later as we go down to the lower time frames, if there is an example, I'll point it out. Okay, so far you can see that prices always range between R2 and M2. And that's the reason for that will be you're looking at the range is being specified by the previous period's range. Okay, so what I mean by that, okay, S2 and R2, okay, the range from the pivot, which is this orange line in the middle, was based off last month's range. So if you look at the range that we saw from here to this high, okay, this is roughly about 100,232, right? Then you measure this price all the way up here, you can get roughly that same length. Okay, so the idea is that if we are looking to have the same sort of momentum from last month, okay, our target will be R2 M4, or if you're bearish, M1 S2. Okay, so if you're bullish, you want to buy in this area just below the pivot and above M2. Okay, if you're bearish, you want to sell just below M3 and above M2, this key right here. Okay, so this month we will be taking on a very bullish stance since we have been in this upward move for about 4 months. 1, 2, 3, 4. Okay. So when will this fail? Okay, it fails when we close below M2. Okay, and then our target will revert back to M1S2. Okay, still M1S2 is a pretty good support for us. Okay, this is determined by that break from this level here. Okay, so this area here broke above, hasn't retested this area. So ideally, even though we are bullish long term, okay, we want to watch out really closely for this break of this trend here. Okay, and if we break below M2 anytime this month, okay, we're going to look for the retest up into this channel and down back into this support. Okay, so I think the biggest news for the stock market would probably be how soon will the Federal Reserve chairman be replaced by Donald Trump, right? There will be a sudden news, not pre-planned news, and that would have a huge impact because it seems to be due to political reasons that interest rates are not coming down in line with the other central banks, right? So if, in fact, Federal Reserve Jerome Powell gets surprisingly a surprise resignation, then you'll probably see the stock market move up higher. Okay, so this is kind of like on the higher time frame, we are already in that move. This bounce back up, 50% of this move up, we are basically looking to move up higher. Okay, so let's break down to the 4 hours. Okay, and when you look at the 4 hours, okay, your pivot point will automatically become the weekly pivot. So same sort of analysis, we're targeting this high here, R204, for this week. Okay, and we have started the week at M2. Okay, very nice M2 point here. So coming down back into this area, we want to see if there is a support at this level, but overall on the weekly, the target is around this area here. Okay, if we break below this, but not below the start of the week, then we are probably going to range between M2 and M3 for this week. Okay. Okay. Again, why are we bullish? Just now when we were looking at the AI research, right? The outcome was that all three are bullish this year. We are expecting further increase towards the end of the year. And NAS100 has the greatest potential. That's why we're looking for a buy. Okay, so something's changed. So on the daily, you will probably see this as the weekly M2. But for us to get into the weekly M2, we are actually bearish on the day. And that's fine because we would like to see prices come down closer to around S1 or S2 before making the buyout. Okay, so where's the key point when you look at this entire area? Huge sell-off from last week. Okay, and what was this day? This 2 days was NFP, right? Okay, huge sell-off. This was the breakout, first group of sellers here. So this is the point of failure. Okay, so you probably want to look at this key area probably tonight to see if you can dip into this level and get more buyers to buy up from here. Okay, this move up, there isn't any retracement, so we can expect this point to be a solid support. Okay, so now since we're on the daily, you can remove this and then get out our sessions. and just want to see if oh, it's gonna have the low time frames. Okay, so ignore this weekly entry. We're looking at this daily entry right now. And you can see there isn't much of a support, but this is the weekly open. Okay, so Asian low is here. This is your London high, and we're looking to sell. So you probably want to see a sweep of these levels and then target. Can we actually hit this London low? Okay, this will be your Monday. So you want to look at Monday 12 o'clock because this is 12 a.m. Monday. Okay, this is your New York. This is Singapore time. So this is New York 12 p.m. Monday. Okay, the true open was Tuesday 12 p.m., which is around Tuesday. So Tuesday. Okay, so this was your true open. Okay, so we are actually making a lower. We're forming a lower low from the Tuesday true open at 12, which is around here. Okay, so on your weekly candle, we're actually moving down, right? Okay, downwards. And if we come all the way back up to this level, we're going to create a wick from that Wednesday, from this Wednesday all the way up to the Tuesday, 12 p.m. The Tuesday afternoon high, right? And then if we do in fact get back up to here, then you will see that this week will be a bullish week and the target will be the upper bound. Okay, Tuesday 12 a.m. So essentially what you see is you want to see yeah, this is the 12 a.m. true open because this is 12 p.m. Singapore time. So it's 12 a.m. New York true open. Okay, so this is the high that we want to beat. Okay, if we get all the way up to here, you can see that there will be very little resistance above this level here, and then the target will be way higher above this point here, previous month's high. Okay, but for us to actually do that, we will first want to come down into this level, and this level would be your Monday 12 a.m. New York time. Okay, so if that is how we are going to plan out, we will first want the London high and yesterday's New York's high to be taken first. Okay, sweep out all of the sellers who are looking to sell at this area here, push the price down into this area of support before we move up higher. Okay, so that is kind of like the plan. We want to compare that with your US 500 and US 30 as well. You'll probably see the same setup. Okay, so yeah, apologies if there's the too many lines. But you'll probably see a longer term move like this. Okay, and for the S&P 500, you'll probably be looking at, so it's much lower for the US 500. Okay, so essentially, whenever we see something like this. So we have NASDAQ 100 on the right, and then US 500 on the left. Okay. So as we have said, if we are looking to target somewhere around here, this area here, okay, that would probably be the same area here. Okay. You see that correlation, very similar. Made this high and then come down. Okay. NASDAQ is a little bit more bullish. Okay. So two key areas that we're looking at, but NASDAQ potentially will have that stronger bounce up. What else do we want to see? All right. Okay, let me see if you guys. All right, cool. So if you guys have no questions, yeah, I think the setup is pretty straightforward. Yeah, we're probably going to be wary of this trend line here. Okay, but nonetheless, okay, because this, when it bounces off this level, okay, the expectation would be that if your sellers are in control and they did not take profit from here, okay, this move 100% move up, okay, if they did not take profit from here, this is the expected move to the downside. You have to break below this low. Okay, the fact that it stopped around here, okay, means that your sellers are exhausted, right? They're not able to push it down any further. So you probably can see something like this, and then higher high, and then as it comes here, you break up, and then you form a new trend. Okay, of course, we can actually look through again this analysis tomorrow, but more or less we are looking at a bullish week this week. All right, that's about time. Do you guys have any questions before we end the webinar? All right, if not, this is where you're going to get your bonus, vantagemarkets.com. And if you are interested in any of the previous webinars, you can go to this link here, /academy/live. And any questions, you can email scott@vantagemarkets.com. All right, with that, all the best to your trading in the New York session, and I'll see you guys again tomorrow. Yep, we can look at the two metals. Oh, so I think we did some analysis here. So there's a triangular pattern. You don't see, usually this is due to indecisiveness. And this is a rather big movement, but something happened on the 28th of July. Okay, it broke down, and then we're retesting this area here again. Okay, so the plan would be that, okay, it's kind of ironic to be bearish on gold, but that is the fact of the matter. There was a selling off for gold. So what I would say is this is the last line of support. Why? Because this was NFP, pushes up, it retested this area, and then it hasn't visited this area since. So if you are if you're still bullish, okay, this is where we're looking to buy. Otherwise, I would say that I wouldn't trade gold in this manner because like it's kind of all over the place, and this long-term triangle is like cutting through a lot of these lines. Okay, right now this white line is where most of the liquidity will be sitting at. So most of the buyers, I think this will be the price to enter. Okay, but meanwhile, this is still the prevailing trend for us. Okay, so we are probably going to look to scalp this all the way down to this level here before, and we need to see buyers coming in before we start to. Whenever you see such a big move from this all the way up here, okay, there tend to be buyers supporting this level. Okay, anyone who missed out on this move here, okay, they're looking to re-enter here. But if it fails to hold, then you can see that move down, and that will be in line with our longer term sell-off. Okay, so if longer term we are looking at bearish move, then this is basically how we're going to start positioning our entries. Okay, and then hold till we see a support form here before we get out of our sells, and then look at that move to the upside again. But meanwhile, this is where we're going to sell. If you are looking at the most precise entry, I would say this was the last support that broke. What's that level? You can say this level or this level. So I would take the lower of the two and then see how it coincides with this pink area here. Okay, what's good about having a horizontal line and a diagonal line? You can plot out both time and price. Okay, I would say this is a little bit more likely, but not today, right? We're gonna see something like this. Okay, why do you need to see this formation? Okay, it has to touch the area the second time before you can consider that sell-off. Okay, let me be a little bit more precise in the drawing. Okay, so you want to be the second time, and then you have this resistance line. Yeah, and then this will be the highest probability entry. Okay, you do not want to set your limits here again, because then if this is an obvious sell, too many sellers coming in here, they will create the opposing liquidity, right? As they get out the market, then you might see something like this, which I think happened yesterday. Okay. So yesterday, I think this was where this area was where a lot of sellers came in, right? You can see the increase in volume. And then because there were only sellers here, the sellers created a stronger opposing liquidity, and then as it comes back down, you can see how fast it shows up. The funny thing is, if you measure that move from the low to the high, okay, look at where the 50% is. Okay, this is 50%. How do I make this thicker? Okay, let's change it to yellow. Okay. So whenever you see such a strong move to the downside, this is about $20, right? 2370 all the way down to 2250. As it comes back up to this level, which is an area which many sellers would say, if I miss this, I will want to come in here, right? And if this area has only sellers in it, okay, no buyers will be coming here. If you're a risky buyer, you will have come in here, right? And it will have paid off. If too many sellers come in here and it breaks above, the length in which you missed out will be given back. And that is why this is the 50% line. 1:1. Okay, same thing. If you think a lot of sellers are coming in here, and there are only sellers in that area, okay, your next area to sell off would be here, yellow line here. Okay. If too many sellers come in here and it breaks above this line, okay, the next area that you want to sell is 3379. Cool. All right, silver. So silver has been I think this was where we were. The last time I looked at silver was somewhere around this range. Okay, so broke out of this range. Okay, contemplated a little bit, but this was a clean break, retest, second chance. So this is the existing trend. So a little bit of a break in terms of correlation between silver and gold, but you'll be looking at this move here, okay, which is a good hedge for each other, because you can buy silver and then sell gold, since both of them tend to be highly correlated. Yep. So whenever we see a parallelogram like this, when it's moving through a channel, it tends to form a range, right? Buyers and sellers trying to compete. And then when one side of the trade gets impatient, right? When your sellers get impatient and say like, this is going nowhere, I'm getting out, that's where you see this big push. Okay, so you want to take a bet, okay? Range, breakout, retest, move up. Okay, so pretty interesting. Silver, we're looking at a very bullish move. Gold still looking for the shots to happen. Okay, if it doesn't get back up to this level and it breaks below this support, okay, we'll be looking at a 3338. If you are a scalper, yeah, overall still bearish on the day. So if you're a scalper, and you probably want to look for a sell-off at this resistance. Okay, no major events coming up tonight, so we'll probably be getting really good and obvious high highs, higher lows, or low high, low lows. Yeah, it's a bit of a stretch, I would say, for us to actually get into this level here. But it's actually very tempting. This 3369 is a very tempting sell zone, even when it's presented with this. So I would probably be expecting a lot of sellers to come in here. They get stopped out, it gets pushed to around 3369 and then sells off from there. Okay, this is formation of liquidity, right? Sellers are coming here, they form buy side liquidity above with their stops, right? So when presented with this price and you're a seller, you will not sell anywhere below this price. because this is a worst of price, right? You know that there is a huge amount of people looking to buy at this area here. Right? Okay. So this blue area here, okay, if you're on Heatmap, Bookmap, or whichever platform that allows you to look at those resting limit orders on gold, either GLD or your gold futures, you'll be able to see this entire area here glowing, right? So if you know that there are people trying to buy here, you will not want to sell anywhere below to any of the buyers below here, but you want to sell to this group of buyers. And given that this yellow line is where they last broke off, this entire area here is going to be filled with buyers. Okay, they are looking to buy or sell, right? Then as it rose above this level, it's getting lesser and lesser liquidity. That's where you put your stops, okay? Just to prevent you from getting stopped out. Okay. So, for those of you who are interested, you can actually look at this the platform. Okay, we're not affiliated, but okay, this only applies for crypto futures and your equities. Okay, it highlights this kind of areas. Okay, this was what I was talking about. On centralized exchanges, you'll be able to see the orders resting above. It's called Bookmap. All right, I guess that's about it. Hopefully that was useful. There's another session tomorrow at 4 p.m. So I'll see you guys again tomorrow.